Okay, everybody. Well, we're looking at the pound on an hourly bar here, and as you can see, the market, after the pound moved down to the bottom end of this trading lane here, it popped up into this little dipper formation at the 314 level, actually got as high as 340. But this is the pattern that I was describing yesterday, how you'll see the market break through this support area here, come down into the little dipper area. Part of the reason why it's so difficult to try and call these ahead of time is you never really know how far down the market's going to go, and you want to target the right Fibonacci level. And as you can see, that I think yesterday I was talking about the 330 level for a possible short trade. I was just checking my notes. For some reason I didn't have that written down. But this is the pattern that I was describing yesterday. You can see that the market broke through the support area, came down here for the double bottom, and started to come back up. Now you remember over here I was talking about how the market had broken through the little dipper pattern. The reason why we would have a different opinion, as you can see, the market didn't come up in as strong as a move. Look at this, it took some time. And then finally there's one fairly large bar here, but let's go back and look at the prior move. Look at the difference. Okay, the market immediately came off of the bottom, had one bar where it retraced, and then boom, one big bar here on the hourly bar. And if we go back over here, you can see it was just quite a bit different. The market hesitated, didn't move up initially. You had one fairly large bar, then finally another bar which finally poked its head up and then closed down, with finally the market showing its true colors over here, as the market failed to go up on higher volume and then eventually closed down on higher volume here. Again, just above the average, not a really high spike. Closing down on basically average volume is a good indication of a reversal. And you can see here the market has come down. It's actually now positioning itself for, if this were a little bit earlier in the session, for a good sneak attack. I'll show you what I mean here. Here's the sneak attack where the market has gone beyond this prior low. It's made a very fast move down. This is a good indication that the short term, at least, the buyers are getting soaked up. I'm sorry, the sellers are getting soaked up in the marketplace. Ideally, you'd see a volume spike over here, which we're not, which indicates to me that the market is likely to head down from here. But we are in this support zone that I've been talking about. We've got to watch here for the market to rest at about the 159 level. I'm not looking to put a new position on, given that the market has already tested this area up here and given us the little dipper to move down. As I was saying before, I really think that the market, if it can move down past this 160 area, it leaves the market open to come down here into the 90s and 50s, possibly even back into the $2 level. So again, we just have to keep our powder dry. If for some reason you didn't get in on the little dipper pattern here, we'll have to wait for another pattern to set up. Now that we've had the market move down, I might add this is where the tunnel pattern ends, right here at about 212. Let me erase some of these lines to make it a bit clearer. So here's the tunnel pattern ending about 212. You can see here the market has exceeded that by quite a bit. But at any rate, this is all indicating that we might get another bounce here. If the market does bounce, what I would anticipate, we've got a resistance level here, here, and here, right at the top end of this yellow rectangle. That's all coming in right about the 240 level. So maybe the market comes back up here, giving another little dipper pattern. Again, remember, you want to see that the market, if the market moves up, that on the volume spike, that the volume isn't excessive. You can see here that as the market was moving up to this high, look at this. The volume spike came in here as the market was at the low, but look at this. As it moved back up, look at how far the volume dropped, actually below the average. All of this is the ideal setup. The little dipper, low volume. The market drops off fairly quickly. Everything lined up here. We just simply have to wait for a repeat performance as the market comes back, possibly into the 240 area, maybe even as high as the 268, 270 area up here.